All right, welcome in, ladies and gentlemen. It is Thursday, June the 23rd, 2022. It was the year 2009 when I had the life-changing accident that kept me in a wheelchair for 6 months and in the hospital for 51 days. I will never forget it because on June 22nd, I posted on Facebook that it was the worst day of my life because I was coming home from Birmingham, which is 100 miles away, and I had to stop at every exit to put water in my car because it was overheating. And I was like, I got home like after midnight. I was like, this is the worst night, worst day of my life. And then the next day I had that accident. So I was always like, I will never, ever again say, well, this is the worst day of my life. Because sometimes you'll be surprised what comes around the corner. You'll have another bad day. But it all worked out fine. They put Humpty Dumpty back together. I've got a titanium pelvis. I dance better now than I ever have. And I got moves that I probably would not have if I didn't have all that titanium in my spine and in my pelvis. So it all works out really good. All right, so let's look at our linear regression first, shall we? Shall we? And now, keep in mind, our chart has drifted downward. Can everybody see this used to be down here, right? And this was at the bottom of the channel. So our channel is even drifting downward. It was never meant to be static. And remember, old Bobby said, it wouldn't surprise us if we see a 4280 by June the 27th. Well, let me tell you something. Unless old Vladimir gets out of Ukraine, I don't see that happening by the 27th. I just don't see that happening. So, but I'll leave it there so we could look back years from now and go, remember when Bobby said we'd go to 4280 and here we are at 2000. Fat black class, Elton John loving bastard, him. So who knows what the market's doing. So remember though, here's the thing. Yesterday we got kind of this little doji chart. Look, and it's a red day, right? And look, the volume was more than on that green day. This is something that we've been noticing as happening. And that's why we continue to believe that we are in a bear-ish market. So, kind of all looks good there. I'm going to move this. I'm going to take this fan off. How do I take this off? I'm going to take that off. Remove, drop it. Yeah, that kind of cleans it up a little bit. See what's going on. Because I don't know what I'm doing when I draw those things. All right, so let's go back to our little chart. Let's go. It got a little bit of a sell-off now. So we were up kind of big, and now we're pretty much unchanged. We see our Williams fractal and our alligators are now pointing downward, which is interesting. And we see that AD is at 12 and has been making lows for the day. Now, for those of you who are SPX 0 DTE traders and like doing that type of thing, it looks like today is what we call an inside day with Tom Sosnoff. Hey guys, Daddy's in a session. You want me to scream at you? I will. So looks like this is what we call a range day, right? Where we go up, we go down, we go up, and go down. So if you're a 0 DTE trader, now don't take my advice on this because the bottom will probably fall out of the market or will come crashing back up. But this is one of those days where you could probably put on a, I got to pause so you can get you out of here. Have to threaten with bottom four. Oh, now the darn dog. So it's one of those days where you could probably do your iron condor in the SPX and make you a nice little profit for the day. But we'll see. If you want to sit there with a catheter in you so you have to watch the markets all day long, I just can't do that. All right, so what's the volume doing? Volume has lowered back down. Remember, was it 11,000 yesterday, day before yesterday? It's 5,800. So we kind of watch what that little level is right here, right? Every 2 minutes, just see what volume's doing. So, not much to see here. Not much to see. Now let's look at our big gray monster. Big gray monster. Look at there. We're at the point of control. This is where the most volume is traded over the last 10 days, and that's kind of where we're at. and we're fairly priced. Everything's fairly priced, so not a lot to see here either. It's fairly priced. Would not surprise us to see a move to this value area high, which is the yellow little thing, which I believe is like a standard deviation above. This is a standard deviation below the point of control. And never surprised to see a move there, but we're fairly priced. So everything looks really good, really stable. While everybody is jumping off bridges and, buying rope and, offing themselves, you and I are doing just fine. All right. So with that said, I've already put in my Greeks for the day. So let's look at our net lick today. So our net lick in this account, we're up $92 from yesterday, not a lot. And then our Greeks and ratios, we are negative. We've got plenty of theta, 0.45%. But here's the problem where we're upset, right? We're using too much buying power. With a VIX between 20 and 30, which we are now, we should be using 35 max. So what we've been trying to do is to take off some positions here just to get that lower. So let's go to that position first, or this account first. See if there's something we can take off for a win before the market crashes. And we won't be able to take anything off. So let's see if there's something we can take off over here and get us a nice little negative 21 plus 23, negative, 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 negative. Not a single winner on the board. Unbelievable. See? Oh, well, hello, ladies. Check it out. Oh my gosh, y'all. Look at the hello, 81%, $53. Well, I like that. So let's take this one off. 36 days to go. Close the order. So I went to my retirement of my boss at the federal judiciary yesterday. Great man, great man. He spent 30 years in the Army. He was a colonel, and it was just so good seeing everybody yesterday at all the 11th Circuit Court of Appeal judges. And it's kind of neat. Hear ye, hear ye. The 11th Circuit Court of Appeals is now in session. Please rise. You got all the pomp and circumstance, which is great. I love that. I love all and we're in this courtroom like from the 1800s. It was just beautiful. Right. Of course, my retirement was just like during COVID. So they're like, here, Bobby, here's your flag. Here's your little certificate, and we'll see you later. But it was still nice. So we got to buy back 2 of the 32 tens. Don't remind me of that. 32 tens. 2 of the 32 tens. But it's weird, but since I'm no longer an employee, I can't just go through security. I got to take my shoes off and my belt off. Just kind of, 25. Can we get out? Get me out. Boy, y'all hear my computer? It's like, it's not too loud for y'all, but my computer's like heating up or something. Come on, get me out, baby. Get me out. Did Dad say get out or what? What did I say? Are y'all not listening? Do y'all want me to cut the watermelon? Yes or no? Well, get out. Kids love watermelon. Of course, I do too. But if you're my age and you eat watermelon like past 5 o'clock, Fred, you're gonna have you a long night. I know what I'm talking about. Ooh. Try eating watermelon on the day that you're doing 0 DTE trade. You really have to have a catheter. So we're out of the 112.23 at what did we get? $3. 112.23. $3. Let's go find 112.23. $3. 112.23. There you are at $3. So we made us a nice little profit of 623, 22. Little profit. Let me let Drew in. We made a profit of. What did we make a profit of? Is that all? I thought it said we made $50 on it. Well, that sucks. After commissions, right? Part of doing business. All right, so we made $39.49. So what could we do for $39.49? That wouldn't even get half a tank of gas, would it? In my Nissan Rogue, my 2011 Nissan Rogue. 39, what was it, 39.49?
I bet it'd get you half a tank in your Rogue, not your minivan.
I don't think Beth likes me driving her minivan. She's like, you taking your car or my minivan? Well, I'm not taking the minivan. Why? Why don't you take your own car? Spiteful, that woman or something. I do like it though, the minivan. I can't wait to go to the beach in it. Look at us, y'all. We're making true money now. Look, we made $95 in realized profits. Look at us. Now, where can y'all find this anywhere else, huh? Well, let's make us $95. That's pretty good. Oh, I'm not upset, are y'all?
Hey, Bobby, I was talking to Smitty about it, and what do you think the realistic returns would be if you did 3 a week? Not one every day, but just 3 a week.
I don't know what the realistic return will be, but I think, you did fine with it. Just do what your account can allow, right? That's what I would do. If that's what your account can allow, just go by the metrics, And where is Smitty, by the way?
He's been busy working. He barely is able to watch the market.
Really? Dude sent me he's got like a fabrication business or something. And Dude sent me a Christmas card and I hadn't heard from him since. All right, y'all, we took that one off. Matt, do what you can. And then if you're doing 3 a week, then what I would do is I would probably, wait till a good down day to put them on. If you're going to be more selective like that instead of every day, that's what I would do. Wait for a good down day, put one on. 13,541. Here's what we're trying to do, y'all, is release that buying power, right? 13,547. Let's put that in. Look at there, y'all. Almost $1,000 taken off. 13,547. But I think what you've really seen over the last few days, we haven't been putting on a lot of trades, but what I hope everyone's seen is that, we got a problem. We're using 94% of our buying power. And what we've done is very strategically, very methodically, we've just taken this down. So that's what I want you to take away. This has been a great learning week, right? Oh, we're in trouble. We only got $1,000 of buying power left. What do we do? Well, you don't panic. You don't panic. So we put on a negative future or something to get our deltas adjusted, and then we've just been, closing them, taking things off very strategically. This has been the best part. All right, so we got that off. So we see how we're doing this. We're going down just about every day. Now, I could go back in and, close another trade, but I don't think so. Rome wasn't built today. RCAP's not built today. We just want to move that way, move in the right direction. All right, so what are we going to do now? Let's go to the other account where we may can put on another trade. So let's go to the other account, the IRA. And someone says, how do you get portfolio margin in an IRA? I don't know. Who needs portfolio margin when you're trading span margin? That's what we do with futures, right? And even Matt, don't you feel better now that we're not having to worry about with every stock on the planet? Remember when we were doing DraftKings and all that stuff? Now that was exciting, ain't no doubt about it. But things just much more simple when we're doing SP 500. Ed says, I know your spreadsheets are set up for MES trades. If we want to use the spreadsheet for other items, can we adjust the notional value and use it? For example, if I'm trading SP, can I enter 2 contracts? So I guess you could do that. Or you could just, copy that and we could change the formula up that would figure out, the multiplier for whatever you're trading. It's not that hard actually. So I would copy the sheet, the one for MES. I don't know if I do that other way. That's too much work. I just say, hey, I'd rather change the formula and figure out the multiplier for whatever you're trading. Now that might take me a while. And y'all know me. I'm on every medication known to man. Antipsychotics. I got all this stuff in me. Adderall, venlafaxine, Effexor, whatever they are. I'm on all that stuff. So right now I'm a little bit foggy. Bobby, Gary says, you mind talking about the AIM strategy? I've been reading the book lately and looking to start the process. Yeah, AIM is great if you're a long termer. What I didn't like with AIM was losing control, especially when we went into the hedge fund, these excellent adventure. But the AIM, I still believe really in the AIM. What I would do is not look at it as often as I did, because we're active traders, right? We're trader nerds. So we were wanting to come in here and do something every day. And with AIM, that's not really your goal. I would say, Gary, set your AIM up. We've got an AIM spreadsheet for you. Figure out, the basket of stocks that you want to put into AIM. It's probably not a bad idea if you wanted to buy some that have been beat down heavily that you believe in long term, and put them in the AIM. I would look at it once a month, to do your rebalance and go forward with that. Yeah, I still believe heavily in AIM. I really believe in hedge fundies excellent venture too. It's just that right now, the bonds portion and the stock portion have both been just obliterated. And I am so glad that I popped out of it, because y'all, we'd be down 60% at least in our accounts if we were still in there. So I'm glad I got out of it at the time. Now, if I was that long term and going, oh man, who cares? I got 20 years, blah, blah, blah. Yeah, you're fine. But I don't know. I just couldn't do enough. Yeah, AIM for SPY would be great. That'd be excellent. All right, so let's look over here into the IRA. Now, the cool thing about the IRA account is we can put in new trades now, right? Because we're only using 30% of our buying power. Let's see if we've got somebody that would, hey, 60 something percent, 24%, 50, 81%. Wowzers. Well, hell no. All right. What the hell was this? Anything in this? Nothing. That must be the one we closed yesterday. All right, so we see something over here. It's got us an 80 something percent, 112.24. So let's take off and look at this risk you're taking off there. You're taking off 4 short puts, right? They're down just a little bit, but you're making the money on this port, put debit spread that we bought for $10, and now you can sell it for $22.75. So that's where that money's coming in. So then we got to go get 4 of the 3170s, 4 of the 3170s. What this 3170, 4 of them. Hello. 225 debit. Come on, get me out of that. Get me out. Get me out. God, y'all hear my computer. Why is it doing that? It'll find, I bought it used on from, what was it, Amazon or something? Damn. Come on, get me in. Sometimes when the volume's not low and we have to move these things around. There we go. There we go, baby. What do we get out of that? 250, right? Yeah, 250. This is the 112.24th at 250. So let's go put that in. 112.24th. Where are you? Right here at 250. So $88.98. Applebee's, here we come. Haven't been to Applebee's in a while. I would love to go. We had hors d'oeuvres yesterday at that little retirement party. All kind of little quiches. You know, they look like they bought them out of the freezer section of Piggly Wiggly, but they were good. 88.98. Let's put our 88.98 in here. Look at us. 88.98. Where else could you make $206 in a week, huh? Pete's working outside in this 100-degree weather, I'll tell you that. Nice and green. Yeah, Liza wants to know, can I talk about the days in the trade and days to expiration are on average in this campaign? Yeah, so, you know, I try to put them on closest to 60 days without going over, right? That's where I put them on. And then on average, this is kind of cool because your spreadsheet will keep this information for you, right? So we are averaging 26 days in the trade. Discount, we're getting $98 per trade on average, new trade put on. And we're keeping 80% of the premium that we sell. So in the other account, go over here, we are staying in the trade about 22 days. We're collecting 64% of the premium that we sold. And on average, we're getting $66. Isn't that cool? So Liza, if you start using the spreadsheet, you know, it keeps up with that information for you. Now, where were we on putting them in? What's the average days in trade? So here it is. Here's DTE, right? So kind of cool thing is this. What's this? I could go equal average of all these days. What's this? And I can tell you the average that we're putting on. Average of all these days is, not to be too nerdy here with spreadsheets, but average of, so on average, 52 days, 52.48 days on average is our average start time. Isn't that cool? But when I'm looking at it, I go close to 60 without going over. So we can put on something on this one today if we'd like. And let's see what the market's doing. Charts. Still where it was. This is my chart. So we can put on one here. Let's see. So let's go to the Tastyworks account. This is where I normally build them out at. We're going to do 112. How would we do it, Bob? Oh, how would we? Well, we go trade, we go table, and we go closest to 60 without going over. Look, this will be our first one doing it here, right? So right here, long put vertical, 50 wide. Move that down to where we pay $10 for it. I've almost forgot how to do them. It's been so long since we put on one. $9.75. Let's move that up to a quarter. Let's see if we can get fit. Keep your hands and feet in the cart at all times. Of course, you're not going to let us get filled with that. So we're going to go up more. Oh, this is all we got to do. 10 a quarter. Come on, give me a feet. Ta-da! Now check this out. My delta is -8 here. Right? I like that. Vega's very manageable. Theta's okay. So would I do a 112 or a 111? It's kind of a flat day, isn't it? So if I go to 111, I could sell this 11% here, or I could do misprice. Or we could go down and do 112 right down here, almost at a 2 standard deviation. I think I'm going to do this. I think I'm going to do this 29.20 and do 2 of those. All right, so I did a 112, right? So let's go here and see for those strikes, and then we'll put it in on the IRA account. But I think the most important thing I want you guys to take away is everybody sees why I'm not putting one in the margin account, right? You see why I'm not. And the reason is I'm using too much buying power. There's no need to take on additional risk when you're, because that's how you blow up accounts. We don't want to blow up accounts. So we'll go here, 57. Then we did 2 of the 29 20s. 2 of these. See, that doesn't look right, does it? No, we didn't sell those for 5. Doesn't look right at all. 29 20s. Huh. Mid price. There, that looks better. All right. Then we did 39, 34.90, 34.40. Buy this one. Good Lord, look at that bid ass price. 34.90, 34.40, 15.50 credit. That looks better. Right, that one. 15.65 credit. Anyway, 1,077 in buying power. And remember, we can do 2 contracts in this account. Or you could do 1, you know, whatever you want to. Since we're up there, I may just do 1. So you don't get filled, you got to make it less advantageous to yourself. So we'll go up to 15. Nothing. Jack squat crap. Nothing. Have y'all been watching the Lincoln Lawyer series on Netflix? That's really good, but it worries me because I've noticed in movies, TV shows, that a lot of the actors, they have to talk like this. And there's a couple people on there that talk like that. But that's not really how people talk, you know? I'm gonna start talking like this. 15.25, y'all. Look at us. Look at us. Let's go put that in. So 112 in the IRA micros. Y'all hadn't seen me put on a trade in a long time. Micros, how many tranches? 1. And we'll call this the 112 32nd. And our little strikes are the 34.90, 34.40, 20, all on the put side. So, man, if you were doing them today, I don't know if I'd do one today. I'd wait till the market's down a little bit. If you're just doing 1 or 3 a week, you know. Days. Look at there, y'all. We've not put on a new trade since the 15th. It is the 23rd. And what we get? 15.25, 15.25. We brought in $70.37. Was it 15.25? Yep, 15.25. And we said that was the 112, what, 32nd? 32nd. Yeah, let's go put that in. Go to your unallocated. There it is. One, 2, 32nd. 32nd D. See this? Just make sure I got all the stuff in there. 7 days. Yeah, that was good. Not cool. Now let's see what our buying power is over here. Just kind of don't want to. I don't want to tempt the risk people over here. 28,938. Let's see what that puts us at. Wow, my buying power went down. 28,938. Oh, it's because I took one off. That's good. So we're at 28. Yeah, I easily could have done 2 contracts, but I want to put one on tomorrow as well, right? Since we're under that, what we should be at, what, 35% now? Yeah, 35%. Let's look at the VIX. We don't look at the VIX enough. See what our friend VIX is doing. And we need to understand something too, y'all. We're in an elevated VIX environment, then we don't get this often. And you really need to take advantage of it, even though, it's not a down day. We do have elevated VIX. Everyone see this? We got elevated VIX here. This is unusual for VIX to stay up for this extended period of time. So we're able to attract a greater premium from those short puts that we're selling, even on an up day, even when the market's up or down just slightly. So we need to keep that in mind because this will not happen that often. Normally we'll have VIX, down here 17 or 18. So you're still getting elevated premium, even though the market's not cooperating and going down, because we said we'd rather sell that naked put on a down day. Okay. So how's everybody doing? Everybody doing okay? Everybody fine? I worry about y'all when y'all don't talk a lot. You're real quiet. Loving the 112. Yeah, they're good, aren't they? Yeah, this is a great trade. I like them. I think the one thing that we've got to figure out, is do we actually want to keep our deltas neutralized with the futures? And I go back and forth on that, it's because I am short some futures right now in this account, but I just kind of want theta to do its thing, right? Theta do its thing. Let me keep these kind of neutralized so that if the market does go down big, I don't want to get burnt too bad. Problem is, if market starts going back up, you get burnt on those futures, right? Let's see my position so I can show you my futures. And I've got -1 future here. I'm down. I'm up $101 on that one. So that's, but my profit and loss year to date on those futures, it's -330. And again, that's what I tell you. Normally when I'm trading futures, the futures contracts, I'm a loser on those often. And I don't look at them enough. Let's just see how we're doing over here in this one. See how our futures are doing. Calls, puts, futures. Well, I'm up $325. Okay. Market must have gone up down a little bit. So you never know, right? But I could easily be down 2,000 or 3,000 at some point on these 4 futures that I've got right now. They're doing me good. So I think that's the only, your short futures, and it's a love-hate thing. It is, Gary. It is really a big love-hate relationship. And you're like, man, on these up days, when the market's up, you go, God, why am I in these stupid things? But then when the market's down, you go, whoa, man, I'm glad I got those things on. So it probably is a necessary evil. Just keep our deltas as neutral as possible. Don't be too bullish too long, and let our money come to us by theta. Because I think we're doing fine. I mean, let's see how we're doing on the realized returns. Right? Realized returns. So we are down -1.51. What's the market down? Now we never want to be down, but compared to everybody else, y'all, I mean, come on. The market itself is down 16.35. We're down 1.54. So I don't know. I'll take that any day. Right? And I am cleaning this up so Ed can have it and the rest of y'all can have it as well. When should we look to take those shorts off or just go with the delta balance? And yeah, Gary, if you get too far short, right, then you take one off. Now, here's the problem. For you to get too far short, what does that mean? That means the market will have gone up considerably. So you will be taking one off at a loss. And that's normally how it works. That's why I say, futures normally is a losing proposition, but it helps you. We just want to keep things really, 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 really tight so that theta can do its thing. So and I covered it in a session earlier this week. What are our risk metrics? Okay, so first of all, delta. Right, we just don't want to be too long or too short. So if this thing says no adjustment, we're fine. Theta between 0.1% and 1% of your account value, and then buying power. So if you can control this, I thought there was 4. One is delta, theta, buying power. This was just 3. I guess I called this a 4th. Anyway, whatever they are, it's the delta adjustment, the buying power adjustment, and the theta. There's 3. Maybe I need to go back and change that. People's like watching that video and going, God, the fat black glassware and son of a gun said there was 4 things and there's only 3. I'm driving some people crazy right now. Anyway, whatever we look at, it just makes it simple, doesn't it? And are y'all doing this? I mean, I never know if y'all are doing this stuff. I mean, y'all looking at your buying power? Yeah, I used to look at Vega 1 to 2, and then I just said, you know what, prep on that. Because I never was using the negative, the Vega to the Delta thing. I always went to this one. So, and it's kind of cool too, right? You can take your account and multiply it if you want to know if you're too long or too short. So take your account balance, 100, 151 times 0.0015. So if, on this size account, if my deltas were over 150, I'd be too bullish. If they were less than negative 150, I'd be too bearish. Rick says, I normally use delta, buying power, and theta to manage. Yeah, Vega was a losing battle for me to manage by. Yeah. I think you're right, Rick. It's just like, yeah, why even worry about it? I think because you're by managing our theta is a risk metric, and our buying power and keeping your deltas kind of neutral, you're managing your Vega. You are, how should we say, if we're going to use like Tom and Tony would say, we're synthetically managing our Vega, right? By keeping our theta, our buying power, and our deltas all in line. Yeah, and then we just let these trades work and let theta come in, and that's all we can do. So I think we're fine. Yeah, I think we're fine. All right. Good session today, guys. Appreciate y'all joining me. I will see y'all tomorrow.